get started on YouTube. Okay. All right. We good. We in there. All right. Listen. So you guys can start asking your questions, but I wanted to run through the list of just the beginner's guide to credit just really quick. And just to have it saved on the live video so you can go back and watch it if you want to, or whoever it applies to. Okay. While we already reconnecting. Okay. All right. Listen. All right, so beginner's guide to credit. Actually, can I share my screen on here? I'm also live on YouTube if you guys want to go over to YouTube, because you guys know with being live on YouTube, you get to see my screen and all of that. TikTok told me that I would be able to share my screen, but I don't see how. Let me see. Okay. Y'all can ask y'all questions, because I don't know if I want to go over the beginner's guide to credit, to be honest, because I feel like I've done it plenty of times. But I don't know. Okay, so I see questions. So, can you talk about the Apple Card? Is it a good card in your opinion? So, the Apple Card, if I had to rate the Apple Card between 1 and 10, I would probably give it a 6, 7, maybe. The reason why it just doesn't get a 10 for me is because I feel that their reward system is very limiting. I don't feel like, their value of their points is equal to other cards that kind of require the same level of credit profile, credit score, things of that nature. I do like it for its beginner friendly user face. I feel like it's the perfect card to get someone used to the reward structure points that goes along with credit cards. There's a few other perks, of course, that I like with the Apple Card, but it's not the best credit card in the world. So yeah, it's a good card though. It's a good card. What would I rate the X1 card? I would probably rate the X1 card probably an 8. And the only reason why I wouldn't give it a 10 is because I just feel like they need to build up their partner like base more. They don't really have many partnerships. Um the If TransUnion delete negative items, how can I get the other two to delete them? So what happens when one credit bureau deletes something and the others does not? It just means that they're all on different accords. So how I try to explain it is the credit bureaus, TransUnion, Equifax, and Experian is sort of like Burger King, McDonald's, and Chick-fil-A. Like they may be in the same industry, they may be serving the same customers, but they are 3 totally different companies. And it's the same for the credit bureaus. Like they don't be on the same page, they don't communicate, they don't talk. So if you are getting one thing deleted from one credit bureau, most times you do have to follow suit and continue to challenge it with the other credit bureaus, because they're not always on the same page. As a matter of fact, they're rarely on the same page. So it's not unusual to get something deleted from, let's say, a TransUnion and it not be deleted from the other two. How good is Navy Federal? Navy Federal is a really good bank. Navy Federal is an amazing bank. I feel like they are one of those banks that you'll be with for life. Like it's a never ending relationship. They offer multiple types of products that you can acquire: car loans, home loans, personal loans. So it's just a really good bank. So yeah. No, this is not the Snoot one. This is the it's a sweet red. It's like a regular one. It is not nearly as strong as the Snoot one. Please speak more on the upcoming FICO TNT score. Okay, look, let me tell y'all the background on FICO TNT in case any of you guys want to know. So for everyone who's wondering, like, what are you talking about? What's FICO TNT? So for all of you who just don't know what we're talking about, right now we go off FICO 8. When I say we go off, majority of the industry will pull your FICO 8 score. So when you are applying for credit, applying for a car, or applying for different things, the bank or the company will likely pull your FICO 8 score, right? FICO 8 is just the most popular, most widely accepted, widely used version of the FICO score. Not many people realize that there is actually a FICO 9. The reason why people don't realize that is because it's just not popular. Lenders did not like FICO 9. The reason why they didn't like FICO 9 is because FICO 9 was more lenient on us. If you notice, your FICO 9 score is likely higher than your FICO 8 score for the most part, because it stopped putting as much emphasis on medical collections under a certain amount, under $100. Whereas older versions of our FICO scores, you still were dinged for that, right? Like even with FICO 9, if you pay a collection, you'll get credited for that. You'll gain, your credit score will go up. That's not the case with FICO 8. So lenders just did not like FICO 9. They did not take to FICO 9, which is why FICO 9 to a lot of people is considered a failure. It came out years ago. Lenders never adapted to it. They still held on to trying to get FICO 8 and pulling FICO 8 as their preferred scoring model. Well, all of that is going to change when FICO 10T comes out, because FICO 10T is basically the do-over. It's the do-over for FICO 9. Because FICO 9 failed, being that it was so lenient, they came out with FICO 10T to sell to more lenders so people can pull it, and they've given them more accessibility into us, our profile. It's stricter on us. Most of our credit scores are probably going to go down. Experts are saying that most people will lose anywhere from like 20 to 30 points on average, half the population, just by switching to FICO 10T. So if your lender, and keep in mind, lenders can still choose which FICO score they want to pull. Like they don't all have to, skip to 10T if they don't want to, but most lenders, in my opinion, I feel like they will, because it is more information for them to, have on us, for them to justify really high interest rates and things like that. So just be prepared. And when I posted that video, it wasn't posted to scare you guys. Like, yes, experts say that probably half of everyone's credit score will decrease. That's just giving you that's just a warning. So use that to your advantage. Now you know that your utilization should be at the top of your mind every single month, because y'all know that your utilization is only counted on your statement date. So it's not like throughout the month your utilization is affecting you. You using your card and you paid a bill and your utilization is sky high. That's not how utilization works. Utilization only matters on your statement date, right? So as long as you make sure that the balance on your credit card is below 10% of your total limit by your statement date, then you are good. Like literally, you're good. You guys know that I use my credit card every single day for every single purchase. There's not a time that I'm going to elect to pull out a debit card over my credit card if I can help it, right? With that being said, many people think that being that I use my credit card and I live off my credit cards, that I have high utilization. I can pull up my credit monitoring app right now, and you're going to see that my utilization is probably like 3%. It's all that matters is that by your statement date, your balance is low. So keep that in mind. Stop thinking that utilization is just like throughout the month. No, you can use your credit cards. You just have to make sure that you pay it back by, a specific date. How do you repair past relationships with creditors and banks? Depending on what the banks are, like Navy Federal, they're a really forgiving bank. Their only requirement is that you satisfy your balance. Most banks, their requirements is just going to be that you satisfy the balance, and some will have you wait 6 months, 3 months or something like that. So you just will have to ask that particular bank. Learning that utilization trick boosted me nearly 90 points. Exactly. Yeah, I'm telling you, I use my credit card. If utilization mattered throughout the month, my score, I would probably have like a 400 credit score, because I use my credit cards. You just have to know when to lower it. That's it. Do you have to wait a certain time frame before disputing? No. So as soon as a collection hits your credit report, you can begin disputing. It's even better if you catch the collection before it hits your credit report, by the way. Don't just like, if you know a collection is on the way, don't wait until it hits. As soon as you get notification that a new collection agency has your account, send them a debt validation letter. This is so you can force them to validate the debt before they even report it to the credit bureaus. Because keep in mind, companies can't ignore your debt validation request. It's against the law. It's against the FDCPA consumer laws, right? So they can't ignore it. You if you send it in time, that's the thing. Y'all don't catch it in time, because catching it in time means that you have responded within 30 days of them first sending you a credit notice. Like a collection notice. You have to respond immediately. The worst thing you could do is just sit on a collection notice, not open it, keep it in the mail. Like you have to respond. As soon as you respond, they're either going to reply back. Some companies will be able to prove and validate the account. Some companies won't reply. Some companies will reply and tell you that they have ceased collection. So it all depends. You just have to respond in time. You have to respond. I ordered the DIY a while back and I can't find where I saved it. So no issues. So if you guys have purchased anything on the site and you didn't get the email, you had issues downloading it, the download expired, any of that, you never have to purchase anything again. You never have to repurchase anything. All you have to do is email customer service. Customer service is info@roadto750.net, and my team will definitely get you your purchase. We'll manually send it to you. We'll get you taken care of. So just email customer service and we got you. Does student loans ever fall off? So everything has an expiration date on your credit profile. Every derogatory account has an expiration date of 7 years from the date of first delinquency. So that means that if your account went into collections this month, then last month would be considered the date of first delinquency. Date of first delinquency is determined off the last positive month before the account went completely derogatory. So before it went into collections, before it went into a charged off status, that is your date of first delinquency, right? So every derogatory account has an expiration date. It doesn't matter what company it is. It doesn't matter what type of account it is. It can be student loans, credit cards, charge offs, everything. Bankruptcies even have an expiration date. So you just want to, be sure of when it was sent to collections. And the date of first delinquency can't change. So regardless if collection agency A sold it to collection agency B cannot just make up their own date of first delinquency. They still have to go off the original date. No, the customer service email is info at road ROADTO 750.net. So info at roadto750.net. What happens when they keep renewing the date? So the date that you're probably referring to is the date of last activity. So the date of first delinquency and the date of last activity are two different dates. So the date of last activity is the month before an account went derogatory, right? So that's like the mark in when it went downhill, pretty much. The date of last activity is just the last time the account status changed. So that can vary depending on what's going on with the account. So it's just two different dates. They are both important because they do both determine different things. Like the date of first delinquency, as I stated before, that is determined by the date. The date of first delinquency determines, how long the account can stay on your credit report, the reporting time of the account. The date of last activity determines how long you can be sued for the account. The date of last activity can change because it's the date of last activity. It's solely based on the activity on the account, right? I don't want to confuse you because I felt like that was a lot. What if your student loans were sold to a third party? Can they be disputed? Anything can be disputed on your credit report. Oh, shit. Shoot. Anything can be disputed on your credit report. Anything. This is the customer service email, guys. I just put it on the screen. What do you think about Credit One credit card? So Credit One is going to be a subprime lender. They're not going to be a credit card. Even their American Express card, they are not. How do I say this without, I guess, because they're not horrible. Even amongst the subprime cards, Credit One will probably be one of my favorites amongst those type of cards. But they're not. They're only going to go but so far. I guess that's a better way to say it. Do you know when FICO TNT will drop? So no, I don't know the exact date. They've been teasing it and sending out information on it for more than 2 years now. It was actually supposed to drop in 2020. Never dropped. COVID came. They said that they would, delay it because of that. And it's still no date, but what I've noticed recently, and which is why I made the video, is because I've noticed a lot of articles about it, like a lot of recent articles from the CNBCs and the MSNs and stuff like that. And that typically means that they're about to start their rollout. So, which is why I just made the video, just letting y'all know, like, hey, they finna change up some things. So get y'all utilization down. What do you mean by 24? What do you mean by they can see 24 months history? What does that mean? Okay, so with FICO TNT, it's called trended data, which is what the T stands for in FICO TNT. It just means that they're going to look at a 24-month span of every single account to determine your patterns. What is the trended data that you usually have on your credit report? What is your usual average utilization that you report? Like, are you a person that reports 3% 1 month, 30% the next month, 70% the next month? Is it very unstable? Contrary to popular belief, banks hate, they don't like when it's not like stable, right? They hate instability. So Then as it stands now with FICO 8, if a lender pulls your credit report right now, they would only be able to see your most recent reported utilization. So if they pull your account, they look at your, let's say, Capital One account, they're only going to see your utilization from January, being that it's February, right? So even if, let's say, during Christmas time in December, you ran up your credit cards and your utilization was like 80%. They wouldn't see that because you've had a refresh in your utilization since then. This is how it currently stands. But then when FICO 8 comes out, when FICO 10T comes out, not only are they going to be able to see what's currently reporting, they're going to be able to see 24 months history of the utilization that you've reported on your statement dates. So just keep that in mind when you guys are, spending on your credit cards. Spend on your credit cards all you want. You just have to make sure you pay it down below 10% by the statement date. That's so important. Like literally, that is where it starts and ends with credit cards. That is when you're able to start benefiting from your credit cards. That is when you're able to not have your usage of your credit card ruin your credit score and stuff like that. You have to be aware of your statement date. I cannot stress that enough. Every single credit card, you need to know when your statement date is. And if the statement dates are all over the place, do what I did. I rescheduled all of my credit card due dates to a specific week of the month so that all of the statement dates fall on a specific week of the month. So it's just better for me. It's better for my memory. Like I know what month, I know what week out of the month that I need to lay low on my credit cards because I need to let them sit and wait till they report on my statement date. Soon as your statement date passes, you're able to spend on your card again. It's literally like a revolving door. It's a revolving trade line. Does not using your credit cards hurt you? It definitely can, because a lot of companies will close it due to inactivity. So if you guys have credit cards that you don't use and you maybe have old credit cards that like you just don't use anymore, the best thing that you can do is put a subscription on that credit card, like a Netflix, a Hulu, a Apple Music, or whatever other subscriptions that you have. Put it on a credit card so that you always have at least a posted transaction per billing cycle. This is going to ensure that you are not going to get that account closed due to inactivity. You don't have to worry about you waking up one day and you losing all of the credit days that was attached to this card. Because no matter what the balance is, the older a credit card is, the more beneficial it is to your credit profile. So you want to keep all of your credit cards open. You don't want to close them. In a perfect world, a credit card is a lifetime commitment, damn near. A credit card is the only account type that's on your credit report that doesn't have an expiration date when you open the account. Like, whereas a loan, it has an expiration date. Soon as you sign the contract for a loan, how long you are expected to make a set payment. So if you have a car loan, you know that for the next 68 months, you are expected to make this $300 payment, right? That's a loan, any installment, right? Credit cards, no, it all depends. Your payment is not the same every month because it depends on your spending habits the prior month. Your minimum balance due is not the same because it depends on your spending habits. There's no expiration date to a credit card. It's just you spend it, you pay it back, you spend it, you pay it back, which is why they call it a revolving trade line. It's a revolving door. You spend it, you pay it back. You spend it, you pay it back. You spend it, you pay it back. Can you tell us some tricks to get better score increases? What do you mean specifically? Because there's a lot of small things, I guess, that you can do to improve your credit. I guess a more specific question. Is it good to have high utilization and then pay it down and not use it? So I don't. Excuse me, that was so nasty. Okay, when you say not use it, and I don't want anyone to take offense to what I'm about to say. I don't know a logical reason why anyone would not use their credit cards. Like, I don't know a logical reason why anyone would use their credit cards and then not use them. You get what I'm saying? Like, there's no benefit to not using your credit cards and instead using your debit card or cash. Like, it's just no benefit to that. So I do think that you guys should do your everyday spending on your credit cards. Like, I do think when you go to the gas station, when you go to McDonald's or whatever, when you go to a restaurant, when you go to shopping, you use your credit card, and then you just pay it back. But it's never good to just not use your credit cards because the company can definitely close it due to inactivity. They will close it due to inactivity. So just be careful about that. Can a charged off account report monthly and add to the balance? So they can change and the balance can change. within 180 days of the account being charged off. So after 180 days of an account being charged off, it is said to be a dead account. So it should not be any more changes reported other than like if you make a payment or something like that. Yeah, you have to be disciplined about paying your credit cards off, guys. Yeah, that goes without saying. So obviously any advice that I give when it comes to credit cards or whatever, understand that comes with the expectation that you have to spend. I mean, you have to pay what you spend. In fact, don't spend on your credit card. See, if we start treating our credit cards more like debit cards, then a lot of us will be in better situations. If you can't go in your bank account and swipe your debit card for a purchase, then you shouldn't be swiping your credit card for that purchase. Like if we truly start viewing our credit cards like our debit cards, then there will be a lot of people who will be in a lot less credit card debt. A lot of times people will associate credit with, not their money. You got to pay that back or it's going to affect you. So don't spend what you can't afford to pay back within the same month. Like, unless you have those, once in a while purchases where you're financing something large, maybe furniture or washing machine, something like that. But for your small everyday purchases, it shouldn't be something that you have to pay over time unless you just didn't need that specific item at that time. Yeah, I moved. You spoke earlier about FICO 10. Aren't they the company that's supposed to start reporting public records? FICO 10 is a version of credit scores. So what do you mean about that? I think, yeah, FICO 10 is just a version that every company will use. When paying off a card, do it because your score to do it cause your okay. When paying off a card, does it cause your score to decrease if you only had the card for a year? So yes, anytime you pay off any installment early, you do run the risk of lowering your credit score because you're not only going to lose your credit age that was associated with that account, you're going to lose the on-time or the payments, the reported payments that was scheduled to post, because keep in mind it's an installment. Therefore, whenever the account was brought and placed on your credit report, it already came with a payment schedule. Your credit report with loans specifically will pretty much kind of calculate how many payments that they're expecting, right? And when you close that account early, those payments never report. Therefore, your score will be reflected by that. So not only are you not strengthening your your on-time payments, which is the biggest factor in our credit scores, you're also going to lose credit age. So I just don't recommend closing or paying off loans early, especially if you don't have a hefty credit report. Like if your credit report is not, thick and you got accounts that show that you have a proven track record of making on-time payments, I would not recommend it personally. What you can do is pay off a large portion of the loan so that you are ridding yourself of debt and you can bring down your debt to income ratio. But you can leave a small balance so that you can still have something reporting every single month. Because keep in mind, you want those on-time payments reported. The more on-time payments that you have reported on your credit profile, the better your credit score will be, the better your credit profile will be considered, the less riskier you would be considered as a consumer. So you just have to keep that in mind. I say don't close installment accounts if you are like new to building credit. If you don't have, 700 plus and whatever, it's not even about the score because it's really about your profile. If you don't have at least 4 and 5 accounts that you have completed according to the terms, so you didn't end it early, you paid it on time, all of that, then you don't need to be closing an account early. And then another mistake that I see a lot of people making. So what they'll do is, let's say they had a repossession, right? And they get another car loan. They'll pay that car loan off early. So let me tell you how, like why that doesn't make sense behind the scenes. So if you have a car loan, an auto loan that you have failed on, like if it reached derogatory status, that is considered an account failure, right? So you failed on your first auto loan and got repossessed. Your second auto loan that you had, instead of showing that you're a changed person, you can pay as you agreed to, you end it early, and then that not only shows that once again you are not doing as you promised to do. You are not going by the loan term that you signed your name on once again. So I know a lot of people think that paying off things early, companies love that. They don't like that. They don't like it. They don't care if you pay off something early. It's just not how they make their money. It's just not how it works. So avoid that if you are, just building your credit profile. So I would for sure suggest that because you need those payments. Does it have to be certified? Does what? No, nothing has to be certified. You could just mail it. USPS mail. What can I do for a previous account that was closed, collection, but is now open, late payment status? So a collection should never report a late payment. So that's where I'm gonna stop you first, because I don't know if you actually meant collection, but a collection should not report a past due balance. A collection should not report a payment history, nor should a collection report a monthly payment, because a collection is you don't have a contract in place with a collection agency. So not that they're not legally able to collect on the account, they're just not legally allowed to place a due date on an account that does not have a contract. In order for you guys to have a due date, you would have had to agree with a contract in place of a payment schedule. So therefore, a collection agency can't have that. They can't report that. And if they do, that is something that you can use to challenge that account factually. So it can be grounds for removal. Everything is, when it comes to credit, the devil is always in the details. It always comes down to the details of the accounts, like especially with collections and of course charge-offs. Like you really just have to pay attention to like the small details. Exactly. Well, in the real world, yeah, we would be happy if we lent someone money and they paid it back to us early. Like, yes, but that ain't how they make their money. They make their money off interest. So obviously, the longer you have something, the more interest that you pay. Is I always tell people in the beginning, when you are building up your credit profile, interest is the small price you're going to pay to avoid paying high interest for the rest of your life. So for your first few accounts, you're going to have to pay some interest. You're going to have to, ride that struggle bus and pay that unfavorable interest rate and pay interest, even though you can pay off this account, because you want to not have to do that ever again. It's kind of like you just getting out the mud at that point with your credit, and then you can benefit. You can benefit from that forever, pretty much. But you do have to have those first few accounts that you show that you're responsible. You could pay as according to plan, all of that. Plus the years of having the account helps. Exactly. The longer you have an account open, the more beneficial it is to your credit profile, especially a credit card. So, yes. If I had a $36 credit card to go into collection, should I just pay it or call the company and they will not pay to delete? So it's not about the balance when it comes to a collection. So just paying it is not going to do anything to your credit profile. Your score is not going to rise. It's not going to benefit your profile in any way. So I know you said the company will not do a pay to delete. Have you challenged them? Because I don't even talk payments to company until they have, been forced to validate the account at the very least. I got to quit prematurely trying to work out payments with it. And by the way, guys, it's tax season. So they're not going to be trying to throw a lot of deals. They think everybody just has an excess of money right now and we just all balling. Therefore, their collection activities will reflect that. They're going to call you more. You're probably going to get more collection calls. If not now, especially when the refunds start to drop, the IRS is super backed up, so they're probably holding off on their collection methods. However, you're going to notice an increase of phone calls and stuff like that from collection agencies, emails. Keep in mind, they can contact you on social media now. So keep that in mind when you guys are answering messages. I wouldn't respond to any collection agency via Messenger. They can't put it on your public wall, but they absolutely can DM you. They can email you. I only communicate with collection agencies via written communication via the mail. I don't play the internet game. I don't play the social media game when it comes to them, because I know that my FDCPA rights are not protected by anything other than written communication. Therefore, I will not respond or communicate with them on anything other than written communication. So that's just my preference. Exactly. They don't care if we don't get returns or not. But look, let me tell you what they do. But they know, because this is how collection agencies work, y'all. So there are, without getting so much into details, I'm just going to briefly and broadly explain how they do it. So collection agencies will, work with companies like LexisNexis to get information on you to like see what's going on in your finances. So there are certain things that happens, or certain activity that happens on your credit report that will alert a credit or a collection agency to start contacting you. For example, if you report a new job to your credit report. So they're like, for instance, if you fill out an application and they ask you what's your employment, and you put a place of employment that's not currently on your credit report, soon as they report that to the credit bureaus, that's going to pop up like a new job, right? Soon as it pops up that you have a new job, your collection agencies are also going to be notified. So they're going to say, oh, LaShawna got a new job, so she got money. Let's contact her. Let's try to get our money. So if you ever just randomly started getting collection calls out the blue and you don't understand what happened, and even if it's an old collection account that you haven't dealt with or heard from in years, it's likely because you had a change of activity on your credit report. So you can either have a new job reported, you could have paid off a debt. Like when you pay off balances, they're alerted by that because they say, oh, she got money because how did she pay off that balance? Not even for their account. Mind you, all of your current creditors has access to your full credit report at all times. It's just one of those things, right? So them having access to your credit report, they sit and monitor you. How you can find out if they're monitoring you, if you download your real credit report from annualcreditreport.com, and it's free. Look at your soft increase, right? Your soft increase does not affect your credit score. Your lenders don't even see the soft increase. It's only for your records, right? Look at the soft increase on your real credit report. And if you see collection agencies on there, so if it says like ABC Collections, Midland Funding, or whatever, that means one or two things. It either means that you currently have a collection with that company and they're just monitoring, trying to figure out how to find you or when to contact you, or you got something on the way from them. They trying to, match some shit up on your credit profile to make sure that it's you. So keep that in mind. Check your soft increase. I can't stress that enough. I'm always checking my soft increase. Because you need to know who's looking at your credit report. And if a collection agency is looking at your credit report, it's for a reason. And they're not just looking because it's fun. They've already presented some sort of information to the credit bureaus that is telling them that they either got an account that they believe to be yours and they can match up more than 2 to 3 match points to prove that it's you, or for a fact they have an account that is yours. So keep that in mind when you guys are looking at your credit reports. What are the other things that alerts collection agencies? So I'm trying to remember off the top of my head, but I know it's reporting a new job, paying off a debt, like a big debt or a big lower. If you lower your utilization drastically, like if you go from 60% to 20%, that's a red flag to them. That's an alert to them. They feel like you got some money. So anytime you have a major change on your credit report, when you report a new address, oh, this person just moved. They think everything is, you got anything that they can feel like, okay, this probably means that she has extra funds. They're going to start contacting you. How do collection agencies find you? Skip tracing. They use LexisNexis. If y'all ever have free time, go to LexisNexis, I believe it's .com, and just look at all the information that they provide on you to creditors, to anyone that wants to buy the information. They have a lot of information on you. Is it better to leave a balance or to pay it off completely? That is a really good question. So the person asks, is it better for your credit card to leave a small balance or should you pay it off completely? So my answer, and I'll just tell you guys how I do it. What I do is by my due date, I pay my full balance off. So I pay my credit cards down to zero, right? That is so that I can avoid paying any interest. So for those of you who don't know, if you zero out your balance by your due date, you won't have to pay interest on your credit card. You are only charged interest on your credit card on the balances that you carry over. So if you zero out that balance, then you don't have to pay interest, right? So because my statement date is after my due date, what I do is I zero it out by my due date, and then I make a small purchase that equals at least 1% of my limit before my statement date, so that on my statement date, I don't have a 0% balance report. And you don't want 0%. So you always want to keep your utilization between 1 and 10% reported. That's the best case scenario. The second that you report a 0% utilization, your score can decrease. Lenders can either look at it like you don't have a credit card, which is a bad thing, or they can look at it like you do have a credit card and you don't use it, which is also a bad thing to lenders, which is also something that when you are applying for a credit card, you apply with a 0% utilization, you're either going to get denied or they're going to give you a very low credit limit than what you deserve or what you would have probably qualified for had you just reported a 1 or 3% interest rate. So it's credit is a game. Credit is a game. I know half the stuff, just like why, I know you're thinking like, why does that happen like that? That doesn't make sense, but it is what it is. So that's something that they look at. 0% utilization is not good. So at least 1% is always preferred. Between 1 and 10%. What about when you apply for a mortgage? So when you apply for a mortgage, they're not going to pull your FICO 8 score. They're going to pull FICO scores 2, 4, and 5, which is also known as your mortgage scores. Someone asked, why are FICO 2, 4, and 5 considered your mortgage scores, and why don't they just use the credit score that every other like lender and stuff like that pull? And the reason is because FICO 2, 4, and 5 is the most strict versions of FICO, right? Like for a lot of reasons. Like a good example is let's take FICO 9, for example. With FICO 9, they are very forgiving for medical collections. They're very forgiving for collections with balances under $100. So they will omit that from your credit score. So it won't affect you, right? FICO 2, 4, and 5, I don't care if your collection is a $0 balance. I don't care if it's a $2 collection. It's still going to affect you the same amount as a $2,000 collection, because with FICO 2, 4, and 5, it just depends on how many derogatory accounts that you have in total. So it doesn't matter about the balances. It just matters how many you have and how old or new they are. So FICO 2, 4, and 5 is just a little more strict, which is why it's used for mortgage lending. It just gives them a complete picture, a more complete picture of you, obviously you as an individual, your finances and stuff like that. So that's just why they chose to make that your mortgage scores. What's the differences between FICO 2, 4, and 5 and 10T? 10T, it's unique because of the T, because of the trended data. Because not even FICO 2, 4, and 5 shows history of your utilization. It only shows your current month. Every single version of our FICO score thus far has only shown the current month. In fact, it's, if you've heard me probably say 1,000 times, guys, don't worry. Utilization has no memory. Utilization has no memory. So you fuck up this month, you can hop right back on the horse next month. It's okay. It doesn't even matter, right? I'm not gonna be able to say that no more when FICO 10T comes out, because it's just not the truth. So yeah, that's the main difference. Honestly, the main difference between FICO 10T and any other version is literally just because they can see trended data, which is a big deal. Like, it's not anything that we just shrugging our shoulders over. It's really a big deal. And a lot of people are not gonna realize how big of a deal it is until it actually launches. But that's a big deal, guys. That's a big deal. Am I nervous about 10T? Nervous just in a way of I'm just gonna have to be more careful, because I do have some months where I'm just like, I just don't care. I'm not trying to buy nothing. So if my utilization does report a little higher than normal, it's just not the end of the world to me. With FICO 10T, I'm going to be more cognizant of that and just, make sure I don't do that, because it's almost like you can't slack anymore. It's almost like you can't be human anymore. So yeah, I mean, I'm scared in that sense, but I mean, with the knowledge and information, you just know already going in, you just have to be more careful. And I guess, is it true that if you're on disability, you don't have to pay your student loans back? So there are different, I don't know all the ins and outs of like what will give you student loan forgiveness. I do know that you typically will have to fill out an application and they have to approve you for it. So I don't know. I don't know about that. It sounds something, I don't know the details, but it sounds like you're a little on it, because I've heard something like that before. I just don't know enough to, talk about it. That's so confusing. Do you have that written somewhere about statement and due dates? Yeah, I do. I have videos about it and everything. I can and I can also make another video about it if I could talk. Can we stop LexisNexis or freeze? So even when you freeze LexisNexis or any other third-party bureau, your current creditors and the credit bureaus will still have access to the file. So not freezing it is not going to keep them out. So it's, yeah. Is there a way to increase your FICO 2, 4, and 5, so your mortgage scores? So one of the things that's really heavy in the calculation of mortgage scores is your payment history. So obviously payment history is a big part of any part of your score, because it's 35% of your score. But with mortgage scores specifically, they really look at that last 24 months of your payment history. So making sure that you don't have any lates for 24 months is going to be your best bet for your mortgage scores. Making sure that your utilization is low. Making sure that you don't have any new derogatory accounts. So collections or charge-offs, of course, they're going to really affect your mortgage score drastically. So that's pretty much all. Like with mortgage scores and how to raise them. They're not going to be as temperamental as even your FICO 8 score, right? Like it's not going to change every month. Like it really takes drastic measures to change your 2, 4, and 5, your mortgage scores. They'll just naturally increase or decrease based on what you've been doing consistently. So just be consistent. It's not going to change every month, but just be consistent in doing whatever you're doing. I forgot. I be forgetting that I could put questions on the screen. Shonda, I messed up, not gonna lie. I went from secured to unsecured with my Discover. $1,000 credit dropped. I know besides paying back, obviously, will my credit go back up? I was in the 700, not the 500. Huh? That don't sound right. Wait, am I missing something? You said you opened a credit card and your score dropped 200 points? That Credit Karma that's reporting that? That something had to happen, because that 200 points for an account opening, I've never seen it in my life ever. So I don't know. I will investigate that. I've just never seen it ever. What advice would you give me if I have too many credit cards? Should I close them? And if so, how long would it take to come back from that hit? So I don't know how long it would take to come back, because it definitely depends on your credit profile, your credit age, and stuff like that. Closing them, obviously, you already know that's going to cause you a hit. What I will say is, if you absolutely have to close them, I would not close my first credit card at all, ever. You want to keep your first credit card always open so that you can preserve that revolving trade line credit age, which is different from your regular credit age. So not the first one. That's not an option. You're going to have to pick, like, maybe if you've opened up a few in a short time span, you can close a few of those, because that credit age will still be savored, being that you opened up more than one at the same time. So just have to be strategic in closing them. It's going to take a hit, but you can kind of cushion the blow a little bit by not closing your first one and not closing too many. But if you're going to do it. There's no point in keep waiting and then deciding later months down the line that you want to close it. If you're going to close it, because the longer you wait, the more credit age will have built up, the more of a point drop you're going to take. How do I find the correct address to send an electric company with a settlement request? What you mean? Like who's collecting on the account? You can find out the address on your credit report. Let me see. What's the downside? Wait. Can you be approved for a mortgage with one collection? You can be approved for mortgages with collections, but it all depends, because first of all, you said it's $1,400, so most likely your lender is going to make you deal with that. Like, you're going to have to set up a payment arrangement or settle that or something like that, because that's considered a high balance collection. So they're going to make you deal with that. Typically speaking, I think any collection, and obviously this depends on your lender and whatever the bank. Most of the time, it's any collections over like $200 to $300 you're going to have to deal with. So you're going to have to set up a payment arrangement. Yeah. It is hot. The heat is heating. Would you recommend someone to refinance a mortgage? Yeah, I mean, I'm team refinance. If you can find somebody that you can pay less interest for the same thing, yeah, I'm all for it. I think you were probably referring to what I was talking about the last live, which was if you have an FHA home loan, I typically recommend that you refinance after 3 years. I don't think that an FHA loan is the type of loan that you ride out until to the end. In my opinion, I just don't. I think that after about 2 to 3 years, you get an FHA, because if that's what you qualify for, get it. But I think that you should work on your credit and try to make some changes so that in 2 to 3 years, you can refinance to a conventional loan, so that you can not have to pay the mortgage insurance and stuff like that. If you kind of add them up, it's typically going to be cheaper going conventional than it is FHA due to the fees. So I think that's what you were referring to. The heat is here. It just went off. I just heard it. Ooh. How many points does your credit score drop when applying for a new car? So that depends on your credit profile. So if you have an empty credit profile, like if your credit profile is thin, you're going to take a bigger hit. You're probably going to take a 10 to 20 point hit, depending. If your credit profile is thick and you haven't opened up many accounts recent, you probably are not going to take much of a hit at all. I started doing really well thanks to your advice. I have too much debt right now, but it's okay. Shout out to you, and I'm glad that you're doing better. When you say too much debt, are you talking about debt on open accounts like, houses and cars and credit cards, or bad debt, which is collections? Because a lot of times you guys say, I have debt, or I have student loan debt, or I have medical debt. There are different types of debt. Like there are things there are debts that's considered bad, and then there are debts that's considered good. So for example, if you get a mortgage, that's considered debt, but it's also considered a good debt. Student loans, I know y'all hate them very much, contrary to popular belief, they're considered good debt. That's an investment in your future, is what most lenders will view that as. So it's not bad debt, even if you have $100,000 in debt or something. I mean, in student loan debt or something like that. So that's not considered bad. If you take out a car loan, that's considered debt as well, which is also not bad unless you default on the loan. The only time debt is considered bad is if you default on it, if you're derogatory, if you have missed payments. If you can't pay what you borrowed, that is when debt is considered bad. But as long as you pay it back, it's not considered bad. What would you consider a good profile for a FHA loan? I would consider a good profile for a FHA loan. I would say the perfect candidate, in my opinion, for a FHA, and I keep having to say my opinion because it's my opinion. I'm not a real estate agent. So the perfect profile, in my opinion, for a FHA loan would be someone with a credit score between 580 and maybe 660. Because I really firmly believe that when you start to get into that 670, 680 range, you probably should just go conventional instead of FHA. So a person that's going to be between like a 580, 640, 660, around that. A person that maybe has, higher debt to income ratio, because with FHA, if you guys don't know, FHA is more lenient than conventional. So it's going to be the loan that if you're having any credit issues, or if you are having, if you don't want to have to pay a lot down, most people will elect to go FHA, right? Because of those reasons. With conventional, you should probably have you should probably have above a 680 if you're going to go conventional, so that it makes sense, so that you are not being hit with an astronomical, interest rate and stuff like that. So I guess that's what I would consider a profile, I guess, for an FHA. FHA is more lenient. They can work with you more. They're more forgiving with student loans, with medical collections, just things like that. You guys know the new kind of like law or rule that came out, around the FHA and student loans. So if you are on an income driven repayment plan, they're going to calculate your actual monthly payment into your debt to income ratio, as opposed to 1% like they used to do. So you can go from possibly having a $500 payment being calculated into your debt to income ratio to only having maybe a $50 payment, depending on what your approved IDR payment plan is like. So if you have student loans and you want to close on a house and it's in deferment or something like that, you have to get it out of deferment to close on a house. So you're going to have to get on an income-based repayment plan, an income-driven repayment plan, or something like that. Don't be afraid to do that, because your lender is likely going to make you do it anyway. Yeah, FHA is good also for lower down payment. Yeah, that's what I said. So lower down payments, and lower down payments is definitely going to be more FHA. FHA is not bad. No. I don't want you. I don't want you guys to get that from what I'm saying. No, FHA is not bad. It's a house. You still close on the house. No, it's not bad. I just think that you can use it as a step stool, as opposed to just riding it out forever. What if it's been over 3 years and I'm on an FHA loan? Should I try? Is it too late to refinance? So it's not too late, no. Especially depending on what type of home loan you have. Like if you have a 15, 30 year, no, I don't think it's too late if you're 4 years in at all. Depending on what your credit profile is, I would definitely try to refinance. Can you explain the middle score? Yes. So when it comes to, getting a mortgage, your middle score is going to be used as your qualifying score. So a lot of people didn't understand what I meant when I said middle score. Your middle score is not bureau specific. It literally doesn't matter which bureau it is. It's literally just going to be whichever score is in the middle. So if we have 3 credit scores, right? So let's say TransUnion, you have a 600, Equifax, you have a 650, and then Experian, you have a 700. Equifax, being that you have a 650, that is going to be considered your middle score, because that's the score that's literally in the middle between 600 and 700, right? So that's going to be your middle score, which is going to be your qualifying score. Qualifying score meaning if that particular lender says that they are not lending out loans for anyone with under a 640 credit score, even if, let's say, 2 of your credit scores are or even if one of your credit score is over the 640, but then one is lower, and your middle score is not at least at 640, you still won't qualify no matter what your other two scores are. So it's always going to be based on your middle score. When it comes to couples, how it works is they still will take both of you guys' middle score. So both people who are on the loan, both persons, whatever, they're going to take your middle score, and then they're going to take the lowest one of the two and use that as the qualifying score. You didn't think that they was going to take the highest one, because that would have been too much like right, and they're just not going to do that. So they will take the lowest one of the two middle scores to determine to be used as the qualifying score. Why can't we pick which one they take? Because that's don't that sound too much like right? You know they ain't doing that. Can you discuss mortgage insurance? What you mean? Like what about it? Does utilization have to be down to refinance a home? So let me just clear something up about utilization. So there are no specific qualifications applying for anything that says you have to have this percentage of utilization. What lowering your utilization does is it's going to maximize your credit score. So if you're going to apply to refinance a home, it absolutely would be in your best interest to lower your utilization so that your credit score can go up, right? So if you lower your utilization between 1% and 3%, at least 45 days before you apply for anything, whether that's a car, a home, a credit card, you are going to place your score in a position that it's able to be maximized based on what's currently reporting on your credit report. So in other words, it's literally going to bring your credit score to the highest that it can possibly be with what's currently reported, no matter if you got collections, no matter if you have charge-offs or anything like that. If you lower your utilization between 1% and 3%, at least 45 days before you apply for anything. And the reason why I say 45 days is because you want to make sure that they are pulling your most recent report. So if you had higher utilization last month, in order to force them to pull your most recent version, you have to wait until a full billing cycle passes. So you want to wait at least 45 days after you pay down your utilization and then apply. That's going to make sure, like I said, your score is just maximized to its highest potential that it could possibly be with what's currently reporting. Hey, if you guys are on TikTok right now, make sure you like the video. If you're on Instagram, make sure you like the video. And on YouTube, make sure y'all like the video. A little like goes a long way for small creators. So I would absolutely appreciate if you guys liked it. NACA is cool. It's a lot of stipulations. It's cool though. It's definitely cool. It's they want you to go. They want you to jump through a lot of hoops. I think you can't do FHA without PMI. I'm gonna bite my words because I don't know if that. No, I know if you pay 10% down, right? So whoever is a real estate agent, mortgage broker, underwriter, can someone clarify that? Can someone clarify that? I know you have to have a certain equity amount before you're able to be excused. The PMI, is it 10% or 20%? That's escaping me right now. PMI stands for private mortgage insurance. What's the goal of 10T? To ruin all of our lives. 20%. Okay, yeah. So it's 20%. Sorry, let me clarify that. So it's not 10%, it's 20%. I couldn't remember if it was 10 or 20. So it is 20%. So after you've reached at least 20% equity in the home, you are able to to ask them to drop the PMI. Do you have to pay student loans back for a VA loan? VA loan like a home? Oh, you're saying like to qualify for it. So again, you don't have to necessarily pay your student loans back for any type of home loan, because most home loans will just calculate a certain percentage of it. Now you will have to, it can't be in default. You can't be in CAVERS, by the way. So if you guys are in CAVERS, meaning like your student loans are in default, or if you have any other government loan and it's in default, you are going to be in a system that's called CAVERS, which is basically just like, the easiest way to explain it is it's just like a government monitoring system that monitors all of the citizens that have defaulted on government funded loans. So if you are in a bad stance with any other type of government loan, you likely are not going to be able to get an FHA loan or a home loan. You have to 80% of equity before PMI is removed. Yes. Excuse me. Sorry, y'all. Is it okay to consolidate student loans? It's okay, but a lot of times it don't really be beneficial. A lot of times companies, because the companies bread and butter be consolidating student loans, and most of the times it doesn't. It's just not. It wasn't supposed to happen. Um, I like I am okay with consolidation in certain situations, but most of the times it's just not. It's pointless. Like it's pointless. All you've done is lowered your credit age drastically, because what happens with a consolidation is you're going to close all of your old accounts and then you're going to open up one new account. So all of your student loan accounts are going to close. Which, keep in mind, for most people, student loans are the oldest trade line that you have. So it's going to be the one with the most credit age, and you got to close all of those, right? Just to open up one account. It's just not worth it a lot of time. IG is stuck. Let me exit and come back. I don't know if it's going to save. It ain't saving. Dang. There was an error. Let me try. I'm going to go back. We are my connection is not working. I don't know why. I we're let's say hold on, y'all. What's one piece of advice that you would give someone trying to buy a home that is an unconventional advice? Unconventional home? That's a good question. I really like that question because it's really making me think. Unconventional advice that I would give to a future home loan. Unconventional. So unconventional, I'm assuming that you means like not like the typical cliche advice. Ooh, that is a good question. Season funds, I would say. I'm sure most people know this, but when you are trying to buy a house, I would not be depositing cash into my bank account that I'm going to use as my income verification, because you're going to have to turn in at least 60 days worth of bank statements, and some companies are going to want more, but at the very least 60 to 90 days of bank statements where they're going to go over all of your deposits, all of your deposits, mainly because they're wanting to see and pinpoint where your money comes from. So when you deposit things in cash, those are considered unseasoned funds. Unseasoned funds are going to be any funds that has not sat in your bank account for at least 60 days. And it's going to be like they're either not going to allow you to use that money to close on your home. So let's say it's the money that you're using to close. They're not going to allow you to use that money if you just deposited $10,000 in your bank account if it's not coming from your payroll. So this is going to be any non-payroll deposits, especially if it's at least 1% of is it the home purchase or the closing costs? I don't know. At least 1% of the total amount, they are going to want to know where that came from. Another thing is you are able to get loans from your family and friends for your closing costs. However, a lot of underwriters are going to want you to write a letter signed from the person saying that it was either a gift or like you're going to pay them back. Also, you can't use unsecured funds for closing. I know you only asked for one, but I'm just kind of thinking of stuff. Unsecured funds means like you can't use a credit card to pay your closing costs. You can't use a crypto account or something like that to pay your closing account. It has to be from secured sources of income. I hope they answered your question. I feel like I'm gonna think on that question though, because I really like that question. I really like that question. So I'm gonna think on that, and I'll probably come with a better answer when I think of it, but I like that question. No, pay the lease ain't gonna work on charge-offs because it's already charged off. Like the original creditor is not gonna want to hear you talking about no deletions because they just don't care. It's already charged off. They've already taken a tax ramification for it. Like they ain't trying to hear that. They don't care. They don't care. You notice most pay the lease are gonna come from collection agencies who's just desperate to get their money, trying to get something, very much something out of nothing. Can you explain the impact our credit cards have on our credit profile? Certainly, the impact that credit cards have on your credit profile is credit utilization is 30% of your FICO score. So that means that it's the second largest factor into your credit score, and that 30% is worth up to 165 points. So if you don't have a credit card, you are willingly giving up 165 points or 30% of your credit profile. If you do have a credit card and you are reporting a high utilization, you are giving up, depending on your utilization, half or even more of those points that you can potentially get. So, for example, the industry standard is 30%. Everybody knows if I want to do good with, Carisha, if I want to do good with my credit card, I have to report a 30% because that's what everyone tells you, right? No. 30% in the finance world is extremely high. You are looked at as extremely risky. Like, it's so high. So when you report 30%, even though you mean well and you think you're doing everything that you're supposed to be doing, you're actually doing your credit profile a disservice because instead of getting up to 165 points, which you could potentially get for a low utilization at 30%, you're only going to get about 60 to 70 of those points, right? So you are literally like giving up half of your points just by reporting 30%. 30% is the industry standard, which is why you hear it a lot. But it's not good. It's literally just you doing just enough to get by. I always liken it to, it's like you getting a C in school. Like, C is not going to put you at the top of your class, but it won't make you fail the class. You're literally just kind of like right there floating in the middle. And that's exactly what a 30% utilization is. It won't lower your credit score by that much, but it also won't like raise your credit score. A lot of times, if you're wondering, why is my score stagnant? Why is my credit score not moving? It's likely because of your utilization. It's likely because of your utilization. Ten to 15% better. No, 1 to 10% is the preferred utilization percentage that you should stay range that you should stay within. Is it smart to do balance transfers on credit cards? That's a really good question. It's smart if you can find a good balance transfer acceptable credit card. So, for example, if Navy Federal has really good balance transfer cards, and it's because their utilization is so low. So if you're going to transfer your credit card balance, you want to make sure that the card that you are transferring to doesn't have any like penalties for transferring balances, for one. And for two, they have a low interest rate because what's the point of transferring a balance from one high limit credit card to the next? It just doesn't make sense. So you want to make sure that it's a low interest credit card. So it's going to be like your Navy Federals or your credit unions, Penn Feds. Is going to be the Chase Slate is known as like a balance transfer card. So something like that. Would you recommend an American Express for a balance transfer? No, I don't. American Express, they don't make cards for balance transfers because their interest rates are not that good to be justifying a balance transfer for them, sure. It is hot, and I can't turn down my heat because I'm on my phone. Let me see. Can you elaborate on transferring a balance? Yeah. Like what you like? Do you have specific questions about? I'm supposed to get back on Instagram. Hold on, y'all. My connection is not working, y'all. I don't know why it's not working on Instagram. It's not working. Why? Why am I doing? Why is it doing that? Yo, it's really hot in this house. Oh, city is a good one. I left them out. My bad. That wasn't on purpose. But yeah, they do have a few good balance transfer cards. Forget Instagram. It's just not working. How long do you have to wait after Chapter 7 to purchase a home? Oh, I'm gonna get that wrong off the top of my head because it also depends on which type of loan you're going. FHA is probably gonna be your best bet because it's different. Is it 4 years? I'm not gonna say the right number because I know for a fact I don't know off the top of my head. I believe it's like 4 years. I could be absolutely wrong. Absolutely, I could be wrong about that one though. I might be hot because the wine, but no, it's hot because I had turned the heat up because I thought it was cold at first. Best way to use American Express card with annual fee. How can I let the usage of my card cover my annual fee? You just have to use it. You just have to use it. You can either you transfer your points that you've saved to pay your annual fee, which is I wouldn't suggest it because it's not a good value for your points. Um, that's that's a loaded answer, and I would have to do a breakdown video because it's all in how you spend it and making sure that you are spending that particular card for the right spending categories. Like it's deep when it comes to credit card rewards and stuff like that to maximize them at least. Any card, hold on. Any card, in my opinion, as long as you pay off. Oh, you was replying to somebody. Charge off versus collection. So the differences between a charge off and a collection is going to be the severity of them. So a collection and a charge off are both considered derogatory accounts. So they're both bad. They both affect your credit score in a negative way. But the main difference is a charge off account is considered a key derogatory, whereas a collection account is considered a derogatory. So that means that a charge off is going to be the worst type of derogatory account that you can get. It's going to be one that's going to be more volatile and accessible to being taken to court and you being sued and you being possibly garnished. And things like that. Whereas a collection, being that you are dealing with a third party entity, is going to be number one, easier to challenge it because they're likely dealing with misinformation or missing information. And then number two, with charge offs, you're dealing with the original creditor. So you are literally dealing with the source of information when going to them and asking them to validate or verify an account. You are dealing with the source of information. So it's the chances of them being able to validate the account, it's going to be high because it's their account, it's their system. They can look in their files to get your reports or whatever. So the difference is literally just the severity of them. One is worse. They're both bad, but one is just worse. I don't have any bank credit cards. Do you think I should? All of my credit cards are store cards. Absolutely. So you guys know that I always recommend for a credit profile for a healthy credit profile, you want to make sure that you have at least 2 credit cards. But amongst those 2 credit cards, one should be a store card. So one should be a traditional bank card that's not tied to a specific store, not a specific retail, not you can just go to one store and spend that card. No, you want to have at least one open-ended bank credit card. So 2 credit cards, one short-term installment, one long-term installment, and keep your utilization under 10%. That is going to be the key, the caveat to you raising your credit score, to you being not as susceptible to damaging changes when FICO T unveils and all of that. FICO 10T unveils and all of that. Like literally align your profile with that one or as close to it as you possibly can, and it's gonna be nothing but up from there. What card gives the best rewards? The card that gives the best rewards. Ooh, that's a tough question because there's no one card that's just gonna kill it across the board. Because typically with credit cards, it's gonna be a card and they're gonna specialize in one type of spending category. So it's gonna be like a travel card, which is gonna specialize in things that you would do out of town, like hotels and rental cars and going to restaurants and stuff like that. So it's going to give you 3 times and 4 times the reward points for purchases that have to do with travel. And then you have cards like everyday cards like the American Express Gold or the Citi Double Cash, or honestly even the Apple Card, where their spending categories and their reward point structure is going to be broken down to where you're going to benefit more from the everyday sort of type of purchases, grocery store, fast food, gas and stuff like that. So there's no one do-it-all card. I got seven main cards that I use for different things. My favorite everyday card is going to be either the Amex Gold, Citi Double Cash. My favorite travel card right now is going to be the Amex Platinum or the Chase Sapphire Reserve. My favorite secure card is going to be the Discover Secure It card, or the Citi Secure card, or the Navy Federal Secure card, or the Self Secure card. My favorite my favorite restaurant card is going to be the Amex Gold, because I think, if I'm speaking right off the top of my head, because I got them all written down, I can't remember every one of them. My favorite is probably going to be for groceries, the Amex Gold, because I think it gives you 3 times the reward points, or maybe even 4. I just know that that's my grocery card, so it got to give at least 3 or 4. What is the best situation to use an Apple Card in? That is a good question. Let me look up there. What am I looking for? Benefits, I guess. I mean, yeah, because someone said they give unlimited. Their unlimited is not really unlimited. They give you unlimited on. Okay, so hold on, y'all. Say 3% save on everything you buy from. They so fucking trash when they do that. Okay, so the best way to spend your Apple Card is gonna be using Apple Pay for sure, because you get more cash back for using Apple Pay. So using Apple Pay and getting gas or food, that's pretty much the best, because it's gonna give you 3% if you use Apple Pay. If you don't use Apple Pay, if you use your physical card, you only gonna get 2%. I mean, you only gonna get 1%. My bad, 1%. It all depends with credit cards. Yeah. Yeah, I know. But listen, I've realized something, because I've been doing a lot of research on credit cards. I've realized that I'm very picky. I'm probably too picky when it comes to credit cards now. Because I be judging credit cards on stuff that I just feel like is normal, sort of say. And I think I need to take a step back, because I really be judging credit cards way too harsh now. When is it a good time to apply for an Amex, American Express card? When your utilization is between 1 and 10%, because American Express is very heavy on utilization. Even if you do get approved and you have high utilization, they're going to approve you at a very low limit, And when you start stepping into the lanes of getting Chase credit cards, American Express credit cards are like more like top tier credit cards. You want to make sure that your first offer, your first application with them, or your first approval, I guess, with them, is going to be a fair limit. Because if you get started off at a low limit, it's going to be hard to graduate that. Not hard to graduate, but you're going to take a long time trying to build that credit limit up. When a lot of people be comparing them, they be applying for them too prematurely. Because I always say, if you get a American Express card or a Chase card and they start you off under $5,000, it likely means that you wasn't ready to apply for that card. Like, you should have probably waited, lower your utilization and stuff like that, because they really shouldn't start you off under $5,000, because those are no matter what anyone thinks about them, those are considered in the finance world, in the credit world, as premier credit cards, right? So premier credit cards don't typically start you off with nothing less than $10,000 if you actually qualify for it. What do I call a low limit? Oh, that is not a fair question, because I really don't have a straight answer there, because I don't even want to give y'all the impression that all of my credit cards are just sitting at 40,000 plus, 50,000 plus. That's just not how. It's not reality. I still have $200 credit cards that I've had from years ago. I still have some credit cards that, in my opinion, my Apple credit card, I've had it for years, and Apple is just very, very stingy to me. Like, I don't think that they are very giving with their funds. It could be because they're still considered new, but they don't be giving like that. Home Depot gave you 25K. Yeah, Home Depot. Who are they through? They're not through Synchrony, right? Are they through Community? Who is Home Depot credit card through? I know Lowe's is through Synchrony, so I want to say Home Depot is through Community, because they are competitors and they can't be under the same bank. Yeah, Apple is Goldman Sachs. I know Goldman Sachs is not new. I meant like the Apple credit card is new. Capital One loves everyone but me. Capital One don't love nobody. Like, who Capital One love? Who has a good limit with Capital One? I've never seen anyone with a great limit with Capital One. Anyone. I'm talking like people with amazing credit score who have amazing credit cards from other banks. Capital One is always never going, like, they just ain't never going to get it together. What's your limits with Capital One? Capital One is very stingy to me. I like Capital One only for their like starter cards. 10,000, that's fair, but I'm talking about, okay, no, I shouldn't. Okay, I don't think, never mind. We could just 10,000, depending on how long you've had that card. It's not good in comparison. I'm only saying it's not good, not that your credit card is not good, but I'm willing to bet if you had the same activity with another bank for as long as you've had Capital One, your limit would be higher than that, is all I'm saying. Capital One is not good with limits. Like, they be having people that's been with them for 10 years still at 15K, 20K. At the most I've seen is probably like 25K for a Capital One. And if you compare that to people who's had, let's say, an American Express or a Chase card for 5+ years, you're going to see them at 40K, 50K, 60K, 70K. I have one of my credit cards from Amex is 80K, and I haven't even had them for nearly as long as I've had Capital One. So is the limits be great until you compare them to other banks is what I'm saying. They're great for a starter card for sure. I think the highest Capital One credit card I've ever seen is 28K or maybe 30K. I think that's probably the highest. Oh, thank you, Tiara. She said, what can I do with a 90-day late payment on a student loan? They updated it in their system, but not for the credit bureau. CB's updated it and so deleted. How long has it been? Has it been at least 90 days? Because keep in mind, they do have about 90 days to make any changes, to report and reflect any changes. And then the only other thing, well, you can't really do anything about it. Like, when was it? Because when you try, you could do the not liable letter or the random late payment letter that I have on the Instagram page. It's also in the DIY kit. That's the specific letter that I use to get rid of my student loan late payments. It's on the Instagram page in the highlights. If you look under late payments, you can screenshot, like literally screenshot the letter and send it. The only way to get your rate lowered is to refinance. I don't even know what rate you're talking about, but any rate, the only way to get it lower is to most likely refinance. I don't hate Capital One. I don't hate Capital One. I just think that they're selfish. That's it. I wouldn't have the beef that I have with Capital One if they didn't try to position themselves in the same arena as some other cards. I really truly think that that's where my beef come from with Capital One. I thought about it the other day because when I was like, I told you guys, I've been looking and taking notes on a lot of credit cards lately just to compare them, because a lot of my content coming up is going to be like reviewing, and I'm very strict on these companies, but reviewing credit cards and stuff like that, right? Now, I've noticed when I'm looking at Capital One, I don't like them only because they position themselves. Now, if Capital One positioned themselves like, let's say, a Credit One, because no matter how I feel about Credit One, I can't get mad at them because they tell you exactly what you're gonna get. These are just the notes. My daughter, hold on, yeah, because she didn't roll all over my notes. So. I forgot what I was gonna say, but oh no, it's in good notes. That's why. See, I just literally just taking notes on credit cards and stuff like that. But I realized that I hate Capital One only because they try to position themselves in an arena at a table that I feel like they just can't sit at. They can't sit at it. Thank you, Eartha. Thank you. Who is that? Yohamo. You said, I have 5 collections from ARS Medical Collection. I try sending the letters, but still don't get deleted. What should I do? ARS Medical. So, number 1, what letters are you sending? Being that they're medical, have you tried the HIPAA letters? HIPAA letters. And if you did you challenge them separately? Because 5 is too much to challenge on one letter for medical collections. At the most, you could do like 2, maybe 3 at the absolute most. Depending on what you've sent, you may have to take a 45-day break, 60-day break, and start the process all over again. Yeah, that's what I'm saying. Again, that's just my beef with them. Don't try to sit at a table that you don't belong at if you are not willing to give as much as the other companies are giving. That is my only thing. Because I think even with the Venture X, which is considered Capital One's top credit card, it's the credit card that they literally made again to try to, they try to compete with the American Express Platinums and the Chase Sapphire Reserves, right? That's what the Venture X is going to be. It's going to be, they wanted it to be your premier travel card. Why, when I signed up for what's considered a premium travel card, am I only going to be given a $300 credit, which wait, hold on, because I know that sounds like, yeah, $300 is good. It is good. It is good. 300 points, but their Capital One's points does not transfer nearly to the value as an American Express or Chase point. So it's going to cost me, I forgot when I looked at it, but it was 10,000 10,000 points, I think, to book one flight, when I can book a flight on American Express for 3,000 points, you know? So it's just like the value of it, their reward structure. It's just a lot of smoke and no fire with Capital One. And that's what it is. Thank you, Eartha. Eartha Lockett. Shout out to you for the what you call them things? Yeah, so I don't have a regular schedule with going live because right now it's just when my kids are like occupied enough to leave me alone for like an hour. But yeah, it's most of the time gonna be at night. I sometimes will do it in the morning, but yeah, it's just random. So make sure you follow so you can get a notification. Follow on YouTube, follow on Instagram, follow on TikTok. All of my platforms, I'm always teaching credit every single day. I'm a certified credit educator. We can talk about anything credit, anything, any question you have about your credit report, I can answer it, all of that. Shout out to you, Frank. You said, how do I get a charge off removed? One bureau deleted it with a letter, but the other two didn't delete it with the letter. So you just have to follow up. So the bureaus are not going to be on the same page because they are 3 different companies. So one may delete it in 1 round, the other one may take 3 rounds. So you just follow up, send round 2. I don't know what round you was on, but send round 2, follow up, and continue to follow up until it's deleted. It's a good news that the other ones deleted it because that leads me to believe that they don't have much information to validate it, which is obviously good for you. Do I have a credit Facebook group? Yes, I do. We actually have the biggest credit Facebook group on Facebook now. It's called Road to 750. Road to 750. Yeah, I have a degree. Not in what I'm doing, but I have one. Any business cards you would recommend? My favorite business credit cards are the Chase Ink. I think the Chase Ink is the best business credit card ever. That and the American Express Platinum business card and the American Express, the blue, I don't know what it's called. I think it's like the Blue Business Plus. I may be getting that name wrong, but it's the dark blue one. I can't never get my questions answered. I'm sorry. What was your question, girl? What was your question? Can I delete, shout out to you, Jarvis. Can I delete a Alley Financial Auto account that has missed payments, but it is a closed account? You could try to delete it. Are you going to get it deleted? I don't know. That's hard to say. I don't know how old it is. It's closed. That's a good thing. How long has it been closed? And did it close like repossession? Like, I need more information. Was it repo or did you finish it off and it just has late payments on it? Because that makes a difference. When are you going to do the go live and ask questions? Honestly, I wouldn't even mind doing it tonight, but I can't even get my Instagram back up. So I can only do the joint live on Instagram because Facebook don't work. I don't know. Oh, I can do it on StreamYard. I would have to drop a link though. We'll do that next time then because I would have to get set up for that. So next time we can do like a full 2 hours of you guys just can come up and ask your personal credit questions and we can do like the free consult kind of like thing. And we'll do it on StreamYard on YouTube. 2 late payments over 10 years ago still show up. That just means that either the account is still active or the account is still reporting. So it's been active in the last 7 years. If it's over 10 years ago, I'm going to be honest with you. I wouldn't even trip on that. Lenders are not even going to trip on that. They're going to omit that from their calculations. Like it's so old and so long ago. They don't care about what happened 10 years ago. Lenders are going to mainly zero in on the last 24 months. Most lenders really the last 12 months, but I always just say 24 just to, obviously just add a little more cushion. But they're going to really pay attention to the last 12 to 24 months of your payment history, and that's what's going to matter. Like when you buy a house, most lenders are going to say no late payments in the last year. You do have a few that's going to say no late payments in 2 years, but like I said, it's between 12 and 24 months. Are closed accounts considered bad? Closed accounts are not considered bad. Closed accounts are just your payment history. Closed accounts just means that for whatever reason, the account has now closed. It can be closed because you finished off paying the loan and it closed. It can be closed because you refinanced to another company and that closed. Closed accounts are not bad unless they are in a derogatory status. So unless they are in collections, unless they are charged off, unless it's repossessed, unless it's a bankruptcy or other public record, then it is not considered bad. Keep your closed accounts on your credit report because all of the history that's included with that account is still being calculated into your credit score. So all of the on-time payments, let's say you had a car loan for 5 years and you finished paying it off and it's now closed. 5 years of payments are calculated into your credit score just because that account is still on your credit report. If you try to dispute that account and get that account deleted from your credit report, so will your credit score reflect that because all of those payments are going to be deleted as well as the payment history. in the credit age that's associated with that account. So leave closed accounts alone. Leave those alone. That's your payment history. That's your credit history. Do you have to keep an active loan? No, you don't have to keep an active loan, but I do say that you should not you should, but for best case scenario, you want to make sure that you have at least a short-term installment every 3 years. Just to show, you're still responsible and stuff like that. And a short-term loan can be something as simple as a self-lender account. It can be a credit builder account, a pledge loan from Navy Federal or your bank or credit union or something like that. It doesn't have to be like a high loan. No, it doesn't. It could be the lowest one that they offer, just to show that you're still responsible, you still paying your bills and stuff like that. Because keep in mind, the older something is on your credit report, the less impact it has on your score. That's both good and bad, because if it's a late payment and it's 5 years old, then that's good for you because that doesn't have much impact on your current score. But in the same breath, if it's a positive account that you've paid off and it's 5 years old, it doesn't have much impact on your score anymore because it's not recent. So you want to keep your credit profile active and refreshed. I always kind of say that you want to, in a perfect world, you want to have at least 2 active accounts at all time, at least. More if you can, but I mean at the very minimal kind of like line, you want to have at least 2 active at all times. So it could be a credit card. It doesn't have to be a loan. It could be 2 credit cards or whatever. Let me see. Hold on. I'm trying to catch these questions. It got closed in October of 2020 and it got paid off full from Navy Federal when I got a new car. Also, you got a new car and that's why it was closed. And you have late payments. You could challenge those. I would challenge them with the random late payment letter. Honestly, being that it's closed, I would do the random late payment letter. It's in a DIY kit if you if you have it already. Thank you, Mr. Campbell. Shout out to you. Excuse me, y'all, I have to burp. Sorry. I don't offer personal consultations right now. I do the consultations on live though. So tomorrow we're gonna do a full live of just the personalized consultation. So you'll be able to come up, ask me about your credit profile. I'm able to ask questions back because that's the thing. Like I be wanting to answer a lot of questions, but I be needing more information because I don't be wanting to give blanket advice. I be wanting to give very specific advice. So if you are interested in possibly getting a free consult, make sure you follow the YouTube page, which is just Road to 750. It's linked in my TikTok bio. It's linked everywhere. And I'll be on live on TikTok at the same time, but in order to join, you'll have to come. Actually, we'll try out one real quick right now before we leave. If I can, here's the link. So I'm going to drop the link in the chat. And if you guys click on that link, you'll be able to join the area so that you don't have to show your face if you don't want to. But your voice, like people will hear you, obviously. So if you want to join, click the link that I just dropped in the comments and you'll be able to come and ask your personal credit questions. I can give you personalized advice. It's a no judgment zone. So I wouldn't care if your credit score was a 300, which is the lowest credit score that you could possibly have. I would not care. I don't care if your credit score is 850. It don't matter. Like literally it's no credit issue that I've not seen to this point. So you don't have to be embarrassed. You don't have to it's just not that vibe like at all. I think I missed a super chat and I'm trying to find it. Hold on. Tierra. Wait, did I miss yours? Okay, I see a few people here. I'm gonna turn you guys up so you can hear them because obviously you can't see them. Actually, I wonder if I put it on here, can you guys see them? No, y'all ain't gonna be able to see them. All right, damn, it's a lot of y'all. Okay, wait, let me answer Tierra real quick. What can I do with a 90-day late payment on this? Oh, I already answered that. Okay. All right, so I am going to bring you guys up one by one, and then you can just talk. So, hey, Celeste.
Hi, how are you?
How are you today? How you doing?
I am wonderful. So I was watching your YouTube video. So basically, my fiance has a repossession. It's now a charge off. I did watch your video where there's a lot of discrepancies. The payments are incorrect. Is it possible to remove that? We're trying to get a house together.
Okay, so You said it's a lot of mistakes.
Yeah.
That's gonna be your bread and butter. But like with any factual dispute and any charge off or whatever repossession, you want to make sure that you start off your dispute process with just a Bureau reinvestigation letter. And that's just to make sure that you are laying all of the proper stones in place so that later on, if you have to double back and sue them or even file a CFPB report, you can prove that you went, with the proper procedure, right? So the proper procedure, according to the law, says that you need to go to the credit bureaus first. Go to them first and ask them to investigate the account. A Bureau reinvestigation letter, I have them on all of my platforms, but it's literally just a letter with you saying, hey, can you investigate this account? You're asking the credit bureaus, can they investigate the account, right? They're going to investigate it. And as a result of that, they're likely going to come back and say it was verified, because that's all that they do, especially with that first round letter. A lot of people think it's pointless, but it's there so you can protect yourself for the procedure aspect, right? After that, you send a follow-up.
Yeah. So let's just say if I didn't want to do any of these, because I'm listening to you as you're saying like your personal consultations. What if I wanted to hire you to do it? Is that possible?
I don't take clients right now.
I don't take clients.
No, I can't do it right now.
Okay.
Yeah, I don't take clients right now. But I promise you it's easier than you think it is. Just send the letters. You're gonna do everything I could have did, and then you're gonna pay me to drop some letters in the mailbox.
Okay.
I'm dropping
So you're saying that it's all on your website in your ebook?
It's in the DIY kit, but even if you want, the letters are free on my Instagram page too. If you go, the letter that I just told you, if you go under collections on the Instagram page in the highlights at the top, you can find the letters that I was just telling you about.
Okay, I definitely will. Thank you.
You're welcome. You're welcome. You have a great day.
You too. Bye-bye.
Thank you. All right. Hey, Jennifer.
Hi, how are you? Can you hear me?
Yeah, I can hear you. How you doing?
Good. How are you?
Oh, I'm sorry. I'm good.
So I had a question about student loans. So I checked my credit report like a week ago, and what I noticed is that student loans, it's the same account that's listed throughout the report. So it's like listed 16 times. So anytime I try to like recently I applied for an apartment because I'm moving out of state. And one of the things that they were saying is that, well, your student loan debt is really high. Well, of course, because I went to school for a very, very long time. But it's listed so many times that it looks like multiple accounts, but it's really just one account. So they probably separated it by semester, I'm assuming.
Yeah, that's how federal student loans are going to be separated by the semester.
Okay. Is there any way to remove that?
No, that's a normal way that they report. The only way to remove it is to consolidate it, which is not going to be worth it for you because you're going to miss out on that credit age.
Okay.
It's going to be the balance, though. That's what they're referring to. Were you trying to go FHA or conventional?
Say that one more time.
You said you were trying to buy a house, right?
No, not buy a house. Apartment. Apartment. Yep. And when they ran the credit report, that's what they said.
Yeah. So it's not the amount of accounts that you have. It's the balance that they're referring to. They just, depending on how much you have.
It's like
apartment complexes don't even
43,000.
Oh, okay. But have you checked another apartment, or was it just that one?
It was just that one.
I would check another one because a lot of apartments they omit your student loans. Most apartments do.
Okay.
So I would try to look at them because that's not a standard procedure for apartment renting.
Okay.
I thought you were going to buy a home. That's why I'm like, why they care that much? But
no. So a couple of years ago, I did look into buying a house, and they did tell me student loans too.
Yeah, now that's what I was gonna say, because recently, as of last year, like a few months ago, if you do an FHA loan and you are on an income driven repayment plan, which is what I definitely would recommend with a balance that high, you can end up paying only $20 a month or something like that. Depends. If you're on an IDR plan, then they will take your payment that you pay them. So if you have a $50 promise payment, they'll use that and calculate it into your debt to income, as opposed to calculating 1% of the total balance, which
I see.
Say you got like 240, that's a lot.
Yes, a lot.
So if you go FHA, you definitely still have a chance with those high student loans if you're trying to buy a house.
Okay. Thank you so much.
You're welcome. You have a great day.
Good night.
You too. All right. Hey, Cheryl.
Hi, how are you?
How are you?
I'm okay. Listen, I had two questions actually. I wanted to let me cut my TV. I didn't know you was gonna pick me. Navy Federal. I I wanted to go on like after 11 or whatever and apply. So I've been setting up for this card for like over a year. So I just ran my FICO score with Experian. I just paid for it, and I got my 3 scores, which was 738 Experian, 785 for 785 for TransUnion, and 784 for the Equifax. So I didn't know if I had to have money in my Navy Federal account to have better odds. And I have 55K total credit, but I only have 4% usage. And I have 18 cards.
Okay, that's great. Wait, so what's the issue?
I'm trying to find out, do I really need money in the account? The Navy Federal account?
What product are you trying to get with Navy Federal?
Yeah, I'm trying to get the American Express card, and I wanted to get that high balance. So I was trying to set up the best scenario, like low utilization. I got 55K, I only have like 2,000 in any kind of credit, like that's my usage. And I have like 17 to 18 cards, depending on which credit platform you choose, Experian, or each of them have like a 2 difference in how many cards I have.
Right. Yes. So the best case scenario is, they definitely like to see they definitely like to see money in that account now it's not in their guidelines. It's not something that they're going to tell you, but I would absolutely say that when you have money in the account for at least 30 days, they will give you more than likely will approve you for a higher amount.
Okay. So what would we call the type of cushion that I need to put in there to make this happen?
It doesn't have to be astronomical, because Navy Federal is not even one of those banks that's super strict on their approvals, if we're being honest. And with your scores, I don't feel like you have to put too much. No, I just think that something
1,000, 500, 2,000,
1,000, if that. You don't even really have to put that much. I'm gonna be honest with you, probably 500, but just they're more so going to see the activity. Like, are you going negative? How often are you taking from that 500? You get what I'm saying? So it's not necessarily about how much, just to show them that you can have money sitting there for at least a month without touching it.
Okay. And one other thing, I had a lot of stuff on my credit report, and I went the lazy way of using Lexington Law, and I've been using them for years, and they've always gotten everything off for me. So I have 2 that will not budge, which is First Premier. They will not pay to delete. First Premier I had 2 cards with them during a bankruptcy years ago, and they will not come off my credit report. They won't make a deal with me or nothing. So I don't know.
You filed them in your bankruptcy?
I had a Chapter 13, but I didn't include them. But I ended up getting delinquent with them because I just didn't have the money. I was paying the 13 back, and I just couldn't afford to pay them. So I stopped, but they are stalking me. Basically, they're not asking me for money. They're just stalking my credit report. So I do have kind of high credit scores.
The opportunity to ask you.
Huh?
But I said that just typically means that they're waiting on the best opportunity to ask you or sue you for the money.
Well, they have only another year to collect on this debt, and it's going to be gone. They only have one more year.
That's when they really be searching for the opportunity, because they are aware that they only have a year left, which is when they typically will start to pick up their collection activities. I honestly wouldn't even challenge them if I were you right now. You only have a year. Let that year ride out. Don't do anything.
Don't bother.
I would not poke that sleeping bear, because you can potentially extend the statute of limitations and have to wait a whole another 7 years. I wouldn't do it.
Oh, okay, because that's all that's going on. I mean, Lexington Law cleared off like a whole lot over the years, so they've been good to me.
I would leave them alone.
Leave it alone, because that's the last part.
We only got one more year, and actually, when you're within 6 months of the natural fall off date, I would call all 3 credit bureaus and say, "Hey, can I get an early exclusion?" That's what it's called. And if you're within 6 months of the natural fall off date, most of them will typically just go ahead and take it off. Tell them, "Hey, I'm trying to close my home. I'm within 6 months of the natural fall off date. Will you grant an early exclusion?"
Okay, that's good, because that's the last thing I got to get off my credit. And then I don't understand how Experian, their FICO scores are 785, 784, but on TransUnion.com, their Vantage FICO score is saying I'm 808. The other one is saying I'm 802.
So you're probably just looking at different variations of your FICO score. That's normal. So you will have different scores for sure, depending on which version you're looking at.
Oh, okay.
Because when I went on, it seems like it's on point. That just goes to show, if your credit profile is on point, it don't matter which score they pull, you always gonna have a good number. So
okay, because I've been working on this. I just came out of a bankruptcy 3 years ago, and I've been working real hard to build a portfolio. But I used to work for credit, so I used to work for First Card, Chemical Bank, and Chase. So I did credit.
Right, so you already know.
So I was just trying to, get back. It took me 3 years to try to get here, though, but I'm here.
You here? I was just gonna say that. It don't matter how long it took you to get there. You're there.
Yes, thank you so much for answering this, because the first premiere was my last part of my problem, and I'm positioning for Navy Federal, so I just need to maybe wait 30 more days and put some money in there and really rock out. But thank you so much for the advice. Have a blessed evening. And I just didn't believe you was going to pick me. I don't have my hair done.
You got your hair done. You look cute. Look at this. You look fabulous.
Thank you.
You look fabulous. You have an amazing night. Okay.
You too. Thank you.
All right, I said I was gonna take one person, y'all. I'm gonna take one more. I was gonna pick the next person. Hey, how you doing? Adon, I can't hear you. You muted.
Okay, how you doing? Can you hear me?
Yeah, I can hear you. How you doing?
Okay, I'm doing well. How you doing this evening?
I'm good. How are you?
I'm all right. So I got a question, right? Mm-hmm. So I had an old secure credit card in 2015. It was through Bank of America, is who I currently bank with.
Okay. So you currently bank with them? Okay.
I currently bank with them. It went into charge-off status in 2020. I'll look at it right now. Okay. In 2015, that's when it went into charge-off status. It has been reporting every month as a charge-off. And I'm looking to purchase property soon. So I've been prepping for that. But it is impacting my credit utilization rate. Every month this comes up. So I'm thinking, well, what do I do? Do I dispute it? Do I pay, work out something while paying it off completely, since it's my current banker who I bank with? What's the best way to approach it for the short term?
Oh, okay. Yeah, that definitely makes a difference, being that you currently bank with them. I forgot all about that, because of course, the minute you start disputing and stuff like that, they can potentially just close they can shut down the entire relationship. So you definitely have to be aware of that. You said it was a charge off from 2015.
Yeah, so it was a secure credit card that I had opened in 2014. So it went into charge off status in November of 2015. And it's still reporting that same utilization. So it was a $500 secure credit card. It's $441. That was the balance.
Right? Yes, it shouldn't even be reporting utilization. That's what I have a problem with. But my only concern is having you challenge them and then they close your entire account. That's the only thing. Now, being that you do have an account with them, who is it? Bank of America?
Yeah, Bank of America.
Hold on, let me look something up real quick, because I believe do you have that CEO email?
No.
I think I do. Hold on. It's Elliot, right? No, I think did Holly take over? Hold on. My bad. I'm trying to. Okay, yeah. So I don't know if you have a pencil or whatever. I would email their CEO. And what I would email them is essentially sort of like a goodwill adjustment, but just asking them, bringing it to their attention. Hey, this account is constantly being updated every single month, which I'm not aware if you know or not, kind of you don't want to blame them. So you want to give it to them lightly. So I'm not sure if you're aware or not, but whenever you are updating it as charged off every month, it's manipulating my date of last activity, which also extends, the statute of limitations. So I'm requesting that you stop that so that I won't have to take it to the credit bureau. You can put it in your own words, but I'm trying to give you guys a chance, because I value the relationship that I have with you guys, to correct this issue before I have to bring in outside or third party sources or something like that. But the email is Holly. So it's HOLLY .O'Neill, O-N as in Nancy, E-I-L-L @bankofamerica.com. And I will absolutely reach out to them, because like I said, and that's the president. She's the president. She's not the CEO. She's the president, but she still has, you know, obviously pull to make changes. So butter them up and just tell them, hey, you know, it's preventing me from possibly purchasing a home and stuff like that.
Okay, so I'll do that, and then can I sneak this one in there? It's just these two collections that I have from 2016.
Mm-hmm.
They still on there. They with two companies that I reached out in the group. I didn't really get an answer as far as if they did pay to delete or not. So I wasn't sure how to approach it, but I know since I'm, you know, in the process of looking for to purchase property, then I want to get them off. So
yeah,
what the heck do I do? Who the collectors?
Yeah.
Okay, let me tell you right now. One is Choice Recovery.
And what type of is it? A utility? Is it a like cell phone? What type of collection is it? A credit
One
card?
is Wild. One is Wild, the internet company.
Oh, okay. So it's like utility, like that will fall under like utilities.
Yeah.
Have you even challenged them at all yet?
No, I haven't done anything with it. I haven't done nothing with it.
You know, unchallenged collection is the best because, you know, you just never know. But you always want to start with that bureau reinvestigation letter. I would absolutely send that to the credit bureaus ASAP.
You know, I did that, right? And they sent me a letter back.
You said you ain't challenging. You did.
Oh, I'm sorry. So I did send the first step one letter. Excuse me. So I sent the step one letter, right?
Mm-hmm. Right.
And they came back and they said, well, this looks like a third party credit repair company. And I'm like, wait a second. I sent my ID and I sent the bill. So how is that? A
stall tactic is what they did. They know most people are going to stop challenging when they get letters like that. You have to push back. No, this is Adonis. Here's my ID. You said you sent that. What happened after that? Nothing.
So I sent that, and that was the letter I got back. I just got that letter back last week.
Oh, call them. Hey, you're trying to, you have to investigate any account that I bring to your attention, and you are trying to prevent me from a rightful investigation. It's me. It's not a company, because they will try to pull that. That's when you just have to kind of put your foot down. Like
So call them.
Call them. Hey, I sent this, and I'm requesting that this goes into investigation immediately.
All right, so I'll call them about that, and then the second agency was the Credit Management LP. That's the name of it, Credit Management.
What credit management? Was it a credit card? Was it a charge off?
So that's the wild one. That's the utility one, Credit Management, and then the other one.
Haven't challenged the WOW yet, right?
The Credit Management one, no.
Okay, yeah. So you just have to start from round one with that bureau reinvestigation. Utilities are not usually that hard to get rid of. So I'm thinking you may have more luck on getting that one deleted, especially just because they call them low hanging fruit collections, utilities and stuff like that. Definitely challenge them. You have to start with that bureau reinvestigation letter first, though.
And then the other one is a medical one with Choice Recovery.
Did you do HIPAA?
I haven't done that yet. No.
Oh, that's always medical is 10 out of 10 every time going to be HIPAA letter 1 and HIPAA letter 2. You send them on the same day. Part 1 goes to the collection agency, and then I may be getting this wrong. Part 1 goes to the credit bureau, and then part 2 goes to the collection agency. Same day, obviously different envelopes, and that's what you do for medical.
Okay, so I'll do that.
Yes.
Cool.
Yes.
Appreciate you. Thank you.
You're welcome. You have a great day.
You too.
All right, y'all. I was supposed to only take one. I think I'm gonna end it for tonight, only because tomorrow I'm gonna do the full live on the consoles. We just gonna do straight consoles. So I'll drop the link. I'll come on. It'll be, I think they allow 10 people in the lobby at the same time. So I'll just literally be going through people's tomorrow for questions. I will save this live on Facebook and YouTube, and it can't obviously save on TikTok. But if you are on TikTok, make sure you are following me. If you're on YouTube, make sure follow me on every platform, because all I talk about is credit. All I teach about is credit. And I'm certified to teach credit all over the United States. So if you have any questions, I can answer it. If you have more questions, leave it in the comments. I make videos all the time. So I will talk to you guys tomorrow. Your girl is sleepy, child. What time is it? Oh, it's 12 o'clock. So I'm sleepy. I will talk to y'all tomorrow. Love y'all. Wishing y'all love and light, positive energy. Don't let nobody fuck up your day, your life, your week, nothing, because you got control over you. So I'll talk to y'all later. Bye.